If you're an Edexcel A-Level Business student and are looking for a video to revise all of Theme 1.5 Entrepreneurs and Leaders, well, this video is for you because we're going to go through everything that you need to know for your exams, including the different roles and characteristics of an entrepreneur, the different reasons why people set up their own businesses, different business objectives, and finally we'll take a look at all the different types of business forms. Let's get into it. The first topic we're going to take a look at in this revision video will be looking at the different roles of an entrepreneur. Now there are several different ones. We're going to break each of them down, starting off with creating and setting up a business. One of the primary roles of an entrepreneur is to actually create and set up the business itself. You know, most entrepreneurs, they end up giving up well-paid jobs with benefits to actually start their own business. And the reason why these businesses exist is because, they want to solve people's problems. They sell a product or service that solves a set of problems in exchange for money. Now, in terms of where entrepreneurs will get their ideas from to start their own business, well, firstly, they might be able to spot a gap within the market. When we look at our market positioning, it's important to note that there are different gaps within the market, but you should only try to go for one if you can see it as being profitable. You might also try and look at the current existing concept of different businesses out there and think, well, I could do it better. I could have my own spin on this. And they can also reflect on their own time when being an employee in different businesses, because they might be able to identify, well, what was this business doing good and what about what they weren't doing so good? And finally, they could also look at trading their skills for money. So for example, if you're into the gym, you may want to go and look into personal training. Now, in terms of the different stages of actually setting up a business, well, first of all, we need to look at creating an idea. We want to look at conducting some market research, maybe some primary, maybe some secondary market research to really understand our customer needs and wants. Then we want to actually look at making a business plan. So figuring out, well, once we've now got all the research, what type of resources do I need? Do I need a team of employees? And what does the actual product and service look like? Then we need to think about actually setting up the business. Are we going to go for a sole trader? Are we going to go for a private limited company? It's key to know all the advantages and disadvantages of these different business forms. And you also may need to look for some funding because certain business ideas, creating prototypes, creating these distribution channels, do require a lot of startup capital. Now, as we said, most entrepreneurs, they may have had a previous working life, but that might not give them enough money and they may not want to risk all of their own personal finance. And then we just need to finalize, put everything together and actually launch the business. Now, the next role of an entrepreneur will be looking at running and expanding or developing the business itself. Now, as we said, once we've actually set up the business, we've had the business idea, we've set up the business legal structure, it's all about getting more customers, all about growing the business itself. So now the entrepreneur needs to think, well, how can I start looking at running the business? How can I look at starting expanding the business? It's going to be key for them to start setting up some aims and objectives because this will help them guide their direction of how they should grow. So we may have an objective of trying to increase our market share by 5% within the next 12 months. So it will be really clear, well, what type of resources do we therefore need to help grow the business? And then as the business is expanding, the entrepreneur will have the opportunity to hire more specialized managers and transition more into a leadership role. So the actual entrepreneur now needs to become the leader, to become the CEO. They'll need to start managing the finances, our cash flow, our profits, maybe even securing more funding. We'll also need to look at building a team, look at managing people, motivating people. And then we need to focus on, well, how are we getting our customers? What are the different marketing and promotional activities? And of course, as the business expands, we need to make sure we have the correct operational processes in place to improve the business's efficiency. The next thing that we'll take a look at is this concept called entrepreneurship, which basically helps innovation within a business. Now, you might be thinking, entrepreneurship sounds very similar to entrepreneurship, and they are closely related. Now, an entrepreneur is someone who creates and starts up their own business. But when we look at entrepreneurship, essentially we're treating our existing employees within our business as they were entrepreneurs. And within entrepreneurship, we want those employees to act like entrepreneurs. We want them to think innovatively. We want them to think creatively. So we are going to be providing these employees with a level of autonomy, a level of freedom to become creative. Because if we have a culture where all of the employees are acting like entrepreneurs, they're thinking of new ways to grow the business, new products that we could sell, well, this will help the overall business start to grow. And a great example is with Google and Gmail. Now, Gmail was developed as an internal project by one of the employees at Google in the early 2000s. Because at the same time, most email services offered limited storage and all these clunky and bad interfaces. But what one of the Google employees recognized is the need for a better solution. Now, what they did is they started working on their Gmail as part of Google's 20% time policy, which essentially allows employees at Google to dedicate their time to being these entrepreneurs, to focus on more personal innovation projects. And by Google doing that, of course, they've now made some amazing products such as Gmail. Now, it is important to note when it does come to entrepreneurship, it is a very difficult field to get into, starting and growing your own business. There are several different factors, mainly around the lack of funding and startup capital. To start up certain businesses, you do require a lot of money. So it's wise for entrepreneurs to actually be choosing what type of business they should start and grow. Because yes, you might have an innovative idea of how you're going to compete with the likes of Apple, but unless you are a secret billionaire, you're really going to struggle to get the funding to do so. And of course, when it comes to entrepreneurship, when it comes to starting up your own business, around 85% of businesses actually fail within 5 years. And that fear of failure, that fear of financial loss, because a lot of entrepreneurs will be investing their own personal wealth into starting the business itself. And the fear of losing that money, the fear of losing all your personal savings can actually put people off it. And most people don't actually know what their idea is. A lot of you watching this will think, well, one day I would love to start my own business, but I've got no idea what in. And we may also have limited knowledge potentially on the market, on our target audience, potentially, well, what problems do they need solving? Of course, time constraints as well. A lot of people who get up into entrepreneurship also work potentially a full-time job, a part-time job. They're potentially trying to manage their home life with starting up a new business. Because starting up a new business takes up a lot of time, especially if you want to run and grow a successful one. And of course, market saturation. You may be entering a market where it's already fiercely competitive. And the last role that we're going to look into is actually an entrepreneur trying to anticipate risk and uncertainty within the business environment. First of all, we want to understand, well, what is risk? What is uncertainty? Well, risk refers to situations where the negative outcomes are likely and can be anticipated. Whereas while we're looking at uncertainty, this involves situations where outcomes are unknown and cannot be predicted. A great example with uncertainty is looking back to COVID-19. There was so much uncertainty with how long these lockdowns were going to last for. Now, most entrepreneurs, they understand the risk of starting their own business because they understand that there is a high likelihood of failure, with over 70-80% of businesses failing within the first 5 years. Generally though, the greater the risk, the higher the potential reward. But the higher the risk, the more likelihood it is going to fail. So there always is that key balance between them. And realistically, when it comes to uncertainty, entrepreneurs, they cannot control this. They can't mitigate this, but they can react to this. And the best entrepreneurs are the ones who react quicker. And how they could potentially prepare for these uncertainties, well, they could set up what we call a contingency plan. Now, a contingency plan is a backup strategy designed to address potential problems or unexpected events. So they might be looking at actually, can we save up a bit of cash just in case something unexpected did happen? The next topic we're going to take a look at in this revision video will be the different characteristics and skills of an entrepreneur. First of all, we'll start off with the characteristics. Now, when we look at the term characteristics, these are like the personal qualities or traits of someone that make them unique. And when we look at the characteristics of entrepreneurs, there are several different ones. Firstly, it's all about innovativeness. So can they have that ability, that unique ability to create these new ideas and these unique solutions? Because innovation is so important in entrepreneurship. You know, there's already these large companies who already sell products and services at competitive pricing. So as an entrepreneur, you've got to think of a new creative way to try and attract these customers. You also have to be risk taking. As we said, there is so much risk with starting up your own business. And you have to be able to manage this. You have to be able to make sure that you are still taking these calculated risks and preparing for these levels of uncertainty. You've also got to be thinking proactively as well, scanning for different opportunities, different threats within the market. The problem is with some business owners is that they start working too much in the business, focusing on the operations and the systems, but don't actually look at the external environment. And you also have to be extremely resilient, because entrepreneurs on a daily basis will be facing setbacks, they'll be facing challenges, they will be failing constantly. But there's a key principle in entrepreneurship that the best entrepreneurs don't see failure as losing, they see failure as a way to learn from and to get better. Amazon are an absolutely brilliant example of this, because Jeff Bezos understands that the more they can fail, the quicker they can learn. You know, for every 10 different business ventures Amazon looks into, 9 of them fail. I bet most of you didn't even realise that around 2014, 2015, Amazon actually tried to sell their own mobile phone, failed massively, they cut all the funding, but they learned a lot from this. And you've also got to be passionate, you've got to be enthusiastic about actually helping customers. Because no one wants to buy from someone who doesn't have that level of enthusiasm or passion for helping them. And you've got to be relentless, you have to have this strong commitment of obviously achieving those business goals. And when we talk about skills, these are like the learned abilities and the knowledge of someone to help them complete that task. And when we look at these skills of an entrepreneur, essentially you're wearing these different hats every single day. One day you're wearing your marketing and your sales hat because you're trying to attract new customers. You're trying to focus on social media promotion, getting on these sales calls, trying to convince people to buy from you. But then the next day you're looking at your financial management hat where you're putting together a budget. You want to make sure you're not overspending. You want to consider, well, do we need any additional funding to grow this company? And then the very next day, you're thinking, well, how can I be communicating with my different stakeholders? A lot of these entrepreneurs are amazing with their communication skills. And then as the business grows, as we said, you've got to stop being this entrepreneur and start becoming a leader. You've got to start managing a team of people. You've got to start motivating them, because a motivated workforce to achieve this common goal is one of the key successes for a business to succeed. And finally, you have to be good at making decisions. You will be making key decisions every single day. And they could be strategic decisions where you look at more the long-term strategy of the business. Or there could be more tactical decisions where you're looking at more of the day-to-day operations of the company. The next topic that we're going to be taking a look at in this revision video is the different reasons why people actually set up businesses. Now, once again, there are several different ones that we're going to look at. Starting off with profit maximization. Now, we know what profit is all about. It's your total revenue minus your total costs. Now, profit maximization refers to generating the highest possible amount of profit while focusing on business growth. And the ways this can be done is by increasing your revenue, decreasing your costs. Now, the idea is that people want to earn more money through their businesses than they would have done through their original jobs. So you can set up a business, you can pay yourself an income, you can pay yourself with dividends as well. Because if I set up my own business and I'm the only shareholder, if I focus on profit maximization, that means I get to make more dividends, potentially making myself more wealthy. Now, the next reason why people may set up their own business, which is a little bit different to profit maximization, is this concept called profit satisficing. Now, when we look at profit satisficing, it means yes, they still want to make a profit, but they don't want to go and make the next multinational corporation. They just want to earn enough to balance their entrepreneurship life with their own personal life priorities. So they may not really choose to expand that much. They may not want to focus on profit maximization, about growing the business, bringing in new employees, bringing in all of these different investors into the company. They just want to earn enough so they can live their balanced life of doing some work, but also supporting their own personal life. The next reason why people may decide to set up their own businesses could be around their ethical stances. Now, ethics are basically what guide our moral principles in life. Having good ethics means that you're going above and beyond what is legally required of you. So someone may start their own business because they want to base it more on this ethical approach. They want to align their values with the work that they start. So maybe they want to resolve an ethical issue. When we look at Tesla's mission statement, for example, it's all about trying to accelerate the growth of sustainable energy. So focusing more on these ethical objectives. The next reason, which is fairly closely related to an ethical stance, is having a look at social entrepreneurship. Now, with social entrepreneurship, basically the entrepreneur is focusing on achieving social objectives while creating a positive impact on communities. So they may want to set up a social enterprise. More on what that is in just a moment. So some examples of social objectives could be about reducing poverty, improving educational levels, looking at environmental sustainability, supporting healthcare, advancing equality, looking at more community development, looking at also supporting people with their mental health. So a very similar concept to the ethical side, but when we look at social entrepreneurship, there are certain social objectives that we are trying to achieve. And another reason why someone may start their own business is because of independence. Now, entrepreneurs, they are typically motivated by the desire of this level of independence, the opportunity to be their own boss. In a previous job, they may have had the luxury of working for a horrible boss who is always mean to them and is a bit too pedantic with things. So they want their own freedom. They want the opportunity to be their own boss because maybe they don't work well for others. Because this provides them, as we've said, with freedom. Freedom to make their own decisions, to pursue their own ideas. Because imagine if you're a really creative person, but you're working in a business which is highly bureaucratic, where there's all these rules and policies that you have to follow, and you can't be innovative. Well, that's a great reason for you then to start your own business because you set your own rules. And it could also be just as simple as, well, I want to have a work-life balance. I want to choose the hours that I work. And that closely relates to our final reason why people set up their own business, because of home working. Now, setting up your own business from home allows you to avoid the dreaded commute to work and also enjoy a bit more flexibility, making it easier to balance your own personal life. Some entrepreneurs, this is really important because it will allow them to spend more time with their family. Now, not all businesses will have the ability to do this, but those who mainly operate online would potentially take advantage over this. The next topic that we're going to be taking a look at in this revision video will be looking at the different objectives a business may set. Now, once again, there are a couple that we have to go through. Starting off with survival. I think I mentioned this a little bit earlier on, but 70% of businesses actually fail after their first 5 years of operating. And when we think, why do businesses fail? Well, typically businesses fail because they run out of cash. They may be starting up a new idea where no one actually wants that type of product or service, or they may have had a really good idea to start with, but they just don't have the actual execution for the idea. Or their ideas become quickly outdated and they can't keep up with the competition. Now, to survive effectively, as we said, we need to make sure that we're managing our cash flow, that we have a healthy net cash flow. And this just isn't looking at the short term, it's also looking at the long-term cash flow of the business. We also want to make sure that we're building a strong customer base because that will allow a constant flow of customers to be bringing me in revenue, bringing me cash inflows. We also need to make sure we're adapting to change. A lot of the reasons why businesses fail is because they get stuck in their own ways. They think we don't need to change our product or service because all of our customers currently love this. And there's a great example of Blockbuster, who was so stuck in their own ways, selling CDs, selling DVDs, that the threat of the substitute of Netflix, they just didn't really look too much into it. And finally, they need to be making sure they are implementing strategic planning, looking over their strategies over the long term. The next business objective we'll take a look at is profit maximization. Now remember, all profit is when we take our total revenue, money we make from sales, minus our total costs. Now the reason why businesses want to make a profit is because, well, first of all, it's a key indicator of their financial health. Over the long term, it's going to be really difficult to sustain a business if you're not making any profit. And of course as well, if you're looking at a business that has shareholders, well, making more profit makes them more wealthy because of dividends, because of the increase in share price. And finally, if you are making profit and you don't want to give it to your shareholders, well, you can reinvest that back into the business. Retained profit and earnings is one of the key sources of finance. Now, how do we look at maximizing profits? Well, realistically, looking at this formula, it's only one of two different ways. First of all, you can really look at increasing your revenue or look at decreasing your costs. Now, of course, for profit maximization, you kind of want to be doing this both at the same time, because just because you decrease costs doesn't mean you make more profit. Same as if you increase revenue doesn't mean you increase your profit. But if you can do that and increase the gap between our revenue and our total costs, well, that begins to increase profit. However, the problem is, if you are just focused on making profit, you may not be thinking ethically. Because what we have to ask is, well, how is the business making their profit? How have they been able to reduce their total costs? Are they exploiting potential labour in these emerging economies? What about their revenue? Are they lying within their advertisement as well? So it's key to pair this profit maximisation with other objectives, mainly around business ethics. Next up, fairly similar to the concept of profit maximisation, we've got sales maximisation. Now, sales maximisation is typically a short-term strategy, and it's in the name. We want to focus on increasing our sales. And this could either be your sales volume, so the number of products you're selling, or it could be the sales value, looking at revenue. Because if we do this, overall, it will help us increase our market share. More on that in just a moment. But this strategy, though, is about driving sales growth, not necessarily managing your cost or ensuring a high profit margin. So focusing on the sales maximisation strategy could be actually making you less profit, because we accept those higher costs, such as increased marketing, more discounts, more production expenses in order to increase our sales volume. So the goal isn't on improving profitability, it's just to maximise sales, which is why we only want to do this over the short term. Now, the business can increase their sales by maybe reducing their prices, because we know the law of demand, as prices decrease, the level of demand goes up. Depends on the price elasticity of demand value though. Then we've got this concept of market share. Well, market share objectives help a business basically measure its performance against others. Now, when we look at market share, it's our business's sales divided by the total market sales. So if we had this massive market pie, how big is my slice? How much am I contributing to the overall market sales? And the reason we want to do that, as we said, is because high levels of market share gives me more bargaining power. Because I'm more of a market leader, I've got more power within the market itself. So when I'm going to my suppliers potentially, I might be asking them for lower prices to increase, once again, my profitability. The next business objective we'll look at is cost efficiency. Now, when we look at cost efficiency, it's not just as simple as reducing the business's costs, because that's just cost cutting. But when we look at cost efficiency, we actually want to reduce what we call our unit cost, which is on average, how much is it costing the business to produce one individual unit. And the reason why we want to reduce our unit cost is because either it'll help us improve our profit margins, or we can start to reduce our selling price to be a little bit more competitive. And in different ways a business can look at reducing their unit cost. First of all, is through economies of scale. So by increasing our level of output, begins to reduce our unit cost through purchasing economies of scale, through technical economies of scale. We could also look at making our operations more efficient, potentially looking at just in time with these Kaizen approaches, because these will help us reduce waste. And finally, we could also look at becoming more capital intensive. So getting our labour, our employees, getting rid of them and replacing them with automation, with robotics and with machinery. And then the next business objective that we'll take a look at is employee welfare. Now, improving employee welfare means enhancing the overall well-being, satisfaction and working conditions of employees. Now, a business can do this by potentially ensuring wages are fair and competitive, offering more mental health support for workers, improving workplace safety, promoting more of a work-life balance and creating this positive workplace culture. And the reason why they would want to do this is because, well, improving employee satisfaction can help improve our motivation for employees. And we know one of the key impacts of that is that productivity levels go up. And if people are happier within the actual workplace, well, there's going to be less employees leaving, reducing our labour turnover and reducing our recruitment and selection costs. And the next key business objective that we'll take a look at will be customer satisfaction. Now, it's in the name. How satisfied are your customers? Because are they happy with the level of service you're providing? Are they happy with the quality of the product? What about the customer service? Now, improving your customer satisfaction levels helps build the business reputation, and it also increases your loyal customers. Now, if customers are more loyal, it increases what we call repeat purchase and the customer lifetime value. which is essentially how much money is the customer spending with your business over the lifetime. And if your customers are more satisfied, well, they're more likely to tell their friends, their network about your business. And that's what we call word of mouth marketing. Now, as we said, to improve customer satisfaction, improve your quality of products. Make sure you offer more customer service. Can you look at training your staff so they are more friendly and have more friendly interaction with your customers? Could be around more competitive pricing because those customers may be more sensitive to prices. And finally, you want to make sure you're engaging with your customers, you're listening to their feedback and implementing on that. And the last business objective that we'll take a look at will be our social objectives. So this is all about following good ethics, which is once again doing what is morally right, that goes above and beyond of what is legally required. So for example, we could look at supporting community development. So adopting more of an environmentally friendly practice that minimises the harm to the environment. We could look at enhancing our transparency in operations. So communicating more openly and truthfully with different stakeholders about business practices, policies and performance, just to try and build a bit of trust and credibility. And finally, you want to promote fair labour practices. So making sure all of your employees have equal opportunities, there's no discrimination, and that you're paying them equally and fairly. Just a quick one, if you are looking for a bit more support with A-Level Business, whether that's improving your confidence with the content or giving you more support around your exam technique, I run a tutoring program that gives you all the support that you need for your A-Level Business exams, whether you are in year 12 or year 13, as we offer one-to-one support, small group sessions, online courses, online resources, messaging support, and so much more. If you want to apply for the tutoring program, feel free to check out the links in my bio. Back to the video. Now, the next topic that we're going to be taking a look at in this revision video, which is going to be a big one, is the different forms of businesses. And we'll look at a few of them with their advantages and their disadvantages. Now, when we look at a forms of a business, it's mainly separated into two key areas within the private sector: unincorporated and incorporated. Now, our unincorporated businesses, consider your sole traders and your partnerships, where your incorporated businesses are your private and your public limited companies. Now, starting off with a sole trader, what on earth is this? Now, a sole trader is an individual, unincorporated business form who just operates the business alone. Okay? Sole trader meaning one. So they do this without any shareholders as well. Because remember, the business is unincorporated, so we do not have shareholders. And we also have this concept called unlimited liability. Now, as we are unincorporated, it means me as the business owner and the business are the same legal entity, which essentially means that if the business goes into bankruptcy or it has any debts that it can't pay, I am now personally liable for it. Just a key misconception though, sole traders can actually still hire employees. Now, why is a sole trader a good business form? Well, you have complete control. It is a sole trader. You are the only owner. But that doesn't mean that your private limited companies can't be solely owned, but normally they would typically start off as a sole trader. It's fairly simple to start up. There's not a lot of paperwork that you have to do or to continuously do it. You just need to submit your tax return at the end of each financial year. And of course, in a sole trader, it is just you. Therefore, all the profits goes to you. No one else. You don't have to distribute it to any other owners. Now we've got what we call our private limited company, an incorporated business form. Now, a private limited company, first of all, the term private. That means the shares of this business can only be bought and sold privately. You can't buy and sell them in the public stock exchange. The next thing we've got is private limited. The limited refers to our limited liability because we are incorporated business form, which means me as the business owner and the business itself are two separate legal entities. So if the business was to go into bankruptcy or has some debts that it can't pay, it means me as the business owner is protected. My personal assets, my house, my car can't be seized to pay it off. And you'll typically find that if the shares can only be bought and sold privately, most family-run businesses are typically private limited companies. Now, what is good? First of all, limited liability. As we've said, your personal assets as the business owner, they are not at risk, meaning that if the business can't repay its debt, my house, my car is all safe. And when we compare a private limited company to a sole trader, the great thing about private limited companies is that we can now start selling shares. We can start selling ownership of the company to raise a bit of money, and this is called share capital. And finally, you could argue you have a bit more perceived credibility and reputation as a private limited company over being a sole trader. And then next, we've got the big ones. We've got our public limited companies. Now, first of all, a public limited company, keyword there being public, means that we can start to sell our shares on the public stock exchange, which means that people can set up a trading account and become an owner of this public limited company. And remember, the key term there also being limited means that we have limited liability. The owners and the business are treated as two separate legal entities. But the key thing about public limited companies, PLCs, is that you are trading on the public stock exchange. Now, you'll typically find a private limited company goes into becoming a public limited company, and this is called a stock market flotation or an initial public offering, which essentially means the very first time of selling your shares on the public stock exchange. Now, the reason why you want to be a PLC is because you want to sell your shares on the stock exchange. Because if anyone can buy it, typically a higher volume of sales of your shares will end up being sold, meaning that the amount of share capital that you could raise goes up by quite a lot. Public limited companies, one of their main sources of finance is share capital. And if you are selling your shares publicly, you'll find you'll get a lot more media traction. Now, that could be a good thing because that's more publicity. That's free advertisement for your business, of course, if you're doing the right thing. And you can finally say that a public limited company will typically have better credibility and reputation over your private limited companies. Now, it is also key to note there are also more different types of business structures that we can look at. Another one could be our non-profit organisations. Now, non-profit organisations are entities that aim to operate and fulfil a social objective without the aim of making profit. So the way that your non-profit organisations end up making money through different fundraising activities, donations, grants, crowdfunding, and of course fundraising. Now, great examples could be about the British Red Cross, we've got Oxfam, we've got Cancer Research, we've got RSPCA, we've got the British Heart Foundation, and we've got Save the Children. Because all these donations that are being made are being reinvested into the business to try and resolve these social issues. Next up, we have what we call our social enterprises. Now, a social enterprise basically takes the best of both in terms of a private limited company and a charity. Because a social enterprise, they want to prioritise these social and environmental goals. So they want to be contributing positively towards society, but they also still want to be making profit. So whereas when we looked at these non-profit organisations, they don't want to make any profit, they just reinvest that into the business, a social enterprise wants to make profit. Now, an example of this could be a cafe is trying to solve the social objective of making sure they're sourcing ethically and they're paying their farmers a fair wage. So they source the products ethically, they're paying them a fair wage. Then, of course, they sell the coffees. People are purchasing the coffee, so the business is making revenue. And we are looking at making the profit and trying to reinvest a lot of that profit back into the business to resolve that social objective. Now, it is key to note, not all of the profits have to be reinvested back in, but there is such a great importance on maintaining profitability. A social enterprise solves these social objectives whilst maintaining profitable business status. The next type of business form we'll take a look at is our partnerships. Now, fairly similar to sole traders because they are unincorporated, but as within the name, we are looking at partnerships. In a sole trader, there's just the one owner, but in a partnership, this is now owned and operated by 2 or more individuals, mainly up to around 20, who share profit, responsibilities, and liabilities. But remember, they are unincorporated, which means they have unlimited liability. So essentially, it's like being a sole trader, but there's just more business owners involved. Now, to actually start up a partnership, you will typically sign a deed of partnership agreement. And this is a legal document that outlines the terms and conditions agreed upon by our different partners when forming this partnership. Because it'll help us define the different roles and responsibilities and the rights of each partner just to try and avoid disputes and obviously ensure that the business runs smoothly. So for example, it will look at how much each partner will invest, how much profit and losses will be shared, the duties of each partner, how decisions will be made, how conflicts will be resolved, the different terms for a partner leaving the business, and how new partners can then join the business. Then we've got another type of business, not necessarily a legal business structure, but more the lifestyle business. And these are more of your smaller scale enterprises, where the main goal of the business is to support the owner's lifestyle and their goals. Some examples could be around personal training, photography for events, freelance writing and graphic design. Now, why? Why would someone want to go for a lifestyle business? Well, first of all, they can look at a bit more of a work-life balance. They want to balance their personal time with their business, but they don't want to be working these 70, 80-hour working weeks. We can also look at more prioritizing personal satisfaction. So they measure their success not on the amount of profit they make, but how happy they are, about how they're able to do stuff in their own free time. Typically, you'll find these lifestyle businesses are more of a smaller scale enterprise because once again, the goal isn't about profit maximization, looking for investors, funding the business, scaling the company. You just want to generate enough income from the business to support your lifestyle, henceforth called lifestyle businesses. And the last type of business form that we'll take a look at is something called a franchise. Now, these operate a little bit different because we've got two parties involved. We've got the franchisor and we've got the franchisee. Now, the franchisor is the one who sells the rights to the franchise to the franchisee. And the franchisee is the person buying into the franchise. Now, essentially, the franchise is going to sell their intellectual property. They're going to sell the rights to that franchisee to use their branding. So what the franchisee would typically have to do is that they must pay this initial franchise fee, maybe around £30,000 to £40,000, let's say. They would also have to pay ongoing royalties, so a share of their revenue or their profit. They also may have to pay any fees just so the franchise can cover any marketing for them and training as well. But in return, the franchisee gets to use their intellectual property rights from the franchisor. So the branding, the products, they would receive training and ongoing support. They would have access to the marketing materials and the campaigns. They would also have these pre-negotiated deals with trusted suppliers so they don't have to do everything themselves. Now, a great example is McDonald's. McDonald's is a franchise and all of those individual stores have been brought by franchisees. So McDonald's don't have to worry about internally growing the business because other people are buying into their company and setting up stores on their behalf. And McDonald's still gets a royalty fee from them. Now, as we said, the franchisee, it can be quite beneficial for them because they're receiving training and support from this established brand. And they're also using the established brand. They're using their brand image, their brand name. So instead of having to set up my own fast food restaurant and developing my brand from there, well, I get to use one of the biggest global brands in the world of McDonald's. But in return, why it's good for the franchisor is that it can lead to rapid growth. Because I'm not worried about, well, how do I set up all these different new stores across the world? Because a franchisee is going to pay me to do it. And we are generating revenue through ongoing royalties and fees. Now, the next topic we're going to be taking a look at in this revision video, we'll be looking at different business choices. Essentially, we need to define two key things: opportunity costs and trade-off. Starting off with our opportunity costs. Now, from the definition here, you can see opportunity cost is the value of the next best alternative foregone when a choice is made. Now, to show you what an example of this could look like, let's say I'm investing £100,000 either into one of these two different options, either into an advertising campaign or a new product launch. But the problem is I've only got enough money to invest in one of them. So I decide to invest in the option one of the advertisement campaign and ignore and not go with that new product launch. But the question is, what benefits have I missed out on not going with our option two? Well, we know that if we was to launch a new product, we could look at missing out on potential revenue that new product could have gave us, the potential market share. Maybe that product could have gained us a competitive advantage, becoming a star within our Boston matrix. And that product could have made our portfolio more diverse and brought us in new customers. Now, we've got great tools such as investment appraisals and decision trees to try and measure the opportunity costs so we reduce the risk of having a large one that we are missing out on. And then we need to look at this concept called trade-offs. Now, all a trade-off is, it's a situation where choosing one option means sacrificing another due to the limited resources or conflicting priorities. So for example, if we was looking at investing in quality products, well, we know we're not going to be able to reduce our production costs. Because when you are focusing on a quality product, you need to source more high quality raw materials. You want to pay your staff more money. So if you are focusing on high quality, the trade-off is that your costs are going to go up. And another one as well could be around profit versus sustainability. Because if we try to implement an eco-friendly strategy, meaning that we wanted to invest in new technology that had lower levels of pollution, well, that means our costs are going to go up, therefore potentially reducing our profit. So the trade-off is, if you want to be more eco-friendly and more ethical, you're probably going to be making lower levels of profit. And the very last thing that we now need to do in this revision video is take a look at the process an entrepreneur needs to take to becoming a leader and the challenges of doing so. Now, an entrepreneur, we know they create, they develop new business ideas, they take risks, they drive innovation to bring their vision to life. Whereas a leader, they will focus on guiding and inspiring a team. They will look at managing relationships and achieving organizational goals. Now, as the business grows, entrepreneurs must become leaders to inspire their employees, to create that clear vision and to really motivate their team. But this is a difficult thing to do. From an entrepreneur turning into a leader, the key thing is that entrepreneurs are the one who had the vision. They're the ones who was innovative. They're the ones who created the product. But when we now look at a leader, they now have to delegate. They have to trust their team to become an effective leader. So an entrepreneur is someone who does everything themselves and starts the business themselves, whereas a leader, they have to try and trust others, and that's where a big challenge can come from. Now, if you're a year 13 student and want to carry on revising for your paper 1, then I highly recommend you check out our video here on globalization theme 4.1. Or if you want to start revising for theme 2, feel free to check out our video here on theme 2.1, raising finance. I hope this video has been helpful for you all, and I'll see you in the next one.